Hi everyone, welcome to the channel. Today our focus is on the tech giant Apple, ticker AAPL. The company has the second largest market cap at more than $2.6 trillion. And though I don't own any Apple shares, I do own a considerable amount of Berkshire, with that company owning more than $170 million of Apple stock. Now we'll take a few minutes to look at the financials, then get into their stock valuation, and at the end we'll look at my portfolio performance. Starting at the top with revenue and net income, though both were down slightly in 2023, the trailing 12 months is showing a recovery. And over the last decade, revenue has gone up 65%, while net income has increased 90%. Now, these aren't too much of impressive growth, but considering the size of Apple, they still find a way to continue growing. While earnings per share has increased more than 175% since 2015. Now, the next two data points are two that I really like looking at. First is dividends. Companies that do pay a dividend, I like seeing this increase over time. We can see Apple has clearly done this with the dividend up nearly 100% since 2015. And then for shares, I like seeing these decreasing, and Apple has been doing this as well. And it looks like over the past 10 years, their outstanding share count has gone down about 30%. Finally, free cash flow, very important when we do have stock valuation. Now we can see they have had a few down years in red, but for 2022 and for the trailing 12 months, see, this is over $100 billion. So very impressive there. And overall, it has increased more than 50% since 2015. Now let's jump down and we'll perform a stock valuation. Here's the valuation set up for Apple, and we will make a modification in a moment, but intrinsic value just under $147, and with a 90% margin of safety brings it to $132.25. And this is using a short-term growth rate of 12% over the next 10 years with a 10% discount rate and a 3% long-term growth rate. Now, up here in the top right, we see the net income CAGR over the last 10 years was 7.3%, while earnings per share CAGR at just over 12%. So this is where I'm getting my short-term growth rate from, is from that earnings per share at 12%. Now, normally I look at net income, or I take a combination or the average of net income and earnings per share. But because this is Apple, a high quality company, industry leader, I'm comfortable using that 12% for my long-term growth rate. Now, Apple stock is currently trading around $173, so slightly below my intrinsic value. And that's why I'm going to point out this now. Return on invested capital. This is a very important data point for an investor, and I normally like seeing over 10%. And we can see for the time period shown, Apple far exceeds that. We see 35% over the last 10 years, almost 50% for 5 years, and then for the 3 year and 1 year, over 50%. So very high numbers, and some of the best numbers I've seen for any company. And I do believe if somebody thinks that my 12% short-term growth rate is on the lower side, I can see taking this into account and probably adding a few percentage points to that growth rate, because this does show that management knows how to handle shareholders' capital and use it wisely and get a high return on that money. So I can see changing this growth rate to a little higher, 14 or maybe even 15%. So let's just see what happens when we increase the 12% short-term growth rate to 14%. So with that 14% short-term growth rate, we can see intrinsic value jumps up to $172.45, and the stock is trading about $173. So right in that range, though it doesn't give you a margin of safety, but you are buying it at that fair value. But let's see if we use a 15% short-term growth rate. Using a 15% short-term growth rate, intrinsic value jumps up to just below $187, and with that 90% margin of safety, brings it to about $168. So if you're buying in using a 15% short-term growth rate, does give you a margin of safety, not quite 10%, maybe more like 8, 9%, but still an opportunity if you think a 15% is a more accurate forecast for Apple's growth. A few other data points to look at. First is PE ratio, just under 27. So this is probably about where Apple's been trading over the past 4 or 5 years, in that mid to high 20 range. Now, a lot of high tech companies do trade in this range as well. Some trade higher, over 30, even close to 40. You probably see that with Nvidia, Meta, Microsoft. They all fluctuate in this range. Moving on, long-term debt to free cash flow. I like seeing this under 3. We can see they're well under that, under 1. So they have no issue with debt. They could probably pay it off if they wanted to. Dividends. I know we looked at this a few minutes ago. We can see they've increased it almost 92% over the last 10 years. So great data point there. But dividend yield, we can see 0.6%, so pretty low dividend. I think the current dividend is like less than $1 a year. So they're probably using their money to buy back shares as opposed to increasing their dividend at a higher rate. But still, they are increasing it, and we should expect the increase to continue moving forward. And shares, as we just mentioned, they have been buying back shares over the last 10 years, down 33%. And since Apple does typically trade at a premium, they're not buying as much as they could, but still, for Apple to buy back 33% over 10 years, I still think that's a quite impressive task for this company, just based on the size that they are. And we should expect this moving forward. Then net profit margin, I like seeing this over 10, and we can see over the last 10 years or over 10%. And for the last 10 years, we can see just over 23%. In the last 3 years, just under 26%. So great profit margins. So overall, a great company. And yeah, I can understand if somebody wants to buy into it. I'm probably not going to buy into it now, only because of some of the other investments I made into other big tech companies like Google, Nvidia, and Tesla. So I'm probably holding off on buying into Apple, especially since I own a bunch of Berkshire anyway. But let's move on now and we'll look at my portfolio performance. Here's the portfolio's performance for March 14th. A pretty red day, though a few green spots. Lockheed Martin, LMT up slightly. Google, looks like Google's finally turning it around after several bad weeks with their Gemini platform. So hopefully that continues. And then URI, United Rentals, up slightly. PayPal, looks like PayPal is starting to turn it around too. Been waiting several months for that to happen. And then TSN, Tyson Foods, been waiting several years for them to turn it around, but we'll see how it goes. I'm also thinking about selling out of that position. But let's just look at the overall performance as well. And here's the overall portfolio performing very well. I see Berkshire in that top center. So that's where I indirectly own Apple, as Berkshire owns about $170 million worth of the stock. And Berkshire is one of my largest positions. One other stock I'll just point out is on the far right there, Tesla, TSLA. Bought into this about a month ago or so. We can see it's down just more than 11%. And just recently, Wells Fargo downgraded the stock. So it took quite a beating over the past day or two. So hopefully things can turn around in the coming weeks. But I hope you enjoyed this video, got some useful information. If so, consider subscribing, and I hope to see you next time. Thanks for watching.